am the voice. Now I am the voice. I will lead, not follow. I will believe, not doubt. I will create, not destroy. I am a force for good. I am a leader. Defy the odds. Set a new standard. Step up.
Hello, champions. Good morning and almost afternoon. So here we are again. We're going to be talking about wealth building and talking about corporations today. And so before I begin and before we move into that, I want to do a little bit of a recap. If you guys didn't listen to, the first 3 sessions, in order to invest in real estate, you have to obviously have some income. And we talked about that on class 1. If you want additional resources and ideas, on how to maximize your income, go back and check that out, take a look at that. And then on the second class, I talked about what to invest in first. And so that is very important because what we invest in a lot of the times is going to make a difference on, whether or not we feel investing is for us and whether we succeed or not. So that was class number 2. Class number 3, budgeting and protection. And so in order to protect what you build, you have to make sure that you're looking at certain things, like your financials and you're maintaining good cash flow. So we moved through that and I gave some samples of that. So check out class 3 if you want to take a look at cash flow and how that works and what to look for. And then today, we're going to get into a bit of the fun stuff. And the reason why I say that is, a lot of people talk about operating under corporations and what corporation to operate under. Before I get moving on this, what I want to tell you guys is this, is initially in this class, I intend to go through what each major corporation does and what the benefits of it are. And at the end of this, and I also want to let you guys know that the 3 corporations that I'm going to be talking about, or the 3 ways of filing returns that I'm going to be talking about and operating a business, I have all 3 corporations and I do operate under all 3, and I have for over a decade. So I do have a lot of experience, believe me, a lot of personal experience, goods and bads, operating under all of these corporations for this amount of time. And so I think it's important because, a lot of the time you can kind of read about things and, you can investigate and talk about all of this stuff, but there's book smart and then there's like the reality of things that happen during the course of operating under these corporations that maybe we're not aware of. So I'll be telling you guys a little bit about, personal things that I would do differently, at the end of the day that I would have done differently if I were to have the opportunity to start over again. So that'll be, towards the end. Today, we're going to be talking, about managing your holdings through the various corporations that we're going to discuss. And so the first corporation is a very fun one. And I say fun because, and mind you, I know that we're talking about real estate investment and we're talking about how to hold property. However, we are all entrepreneurs, and here in real estate, a lot of you real estate agents are not currently operating under corporations. And I do feel that in order to operate effectively under one corporation, you should know about all of them. And so even though the C corporation, and as I move through this, you'll see why this is definitely not the place to hold property. I feel that it is very important to understand the operation of each corporation and what it does. So the C corporation is Diamond Ridge Corporation, DBA Remax Champions. It is what I operate Remax under. And, like I said at the end, I'll kind of explain why. It provides the greatest level of personal liability protection in a corporation. This corporation can have multiple shareholders. This type of corporation is what most Fortune 500 companies are. So the shareholders can fund the company to expand the company, which opens up a whole lot of possibility when you're operating a company. You can personally fund the company, and there is massive tax value on that. There's zero limit on shareholders. And with this particular corporation, you can write off so many things. Like there's so many openings for write-offs on a C corporation. However, it is, just as it says on here, a complex corporation, okay? This type of corporation isn't one that you're just going to file and then forget about. You obviously have to have your articles of incorporation, a service process agent. Mine is Rod Fellman. He does handle everything to do with my C corporation, which is Remax. And then you issue stock certificates. So on a C corporation, it could be very deceiving because one individual or entity could be filed as the owner of the corporation. However, the true ownership on this type of corporation is issued through stock. So you could have one person as the figurehead and then have absolutely zero ownership in this type of corporation because 100% of the stock could be and belong to somebody else. Now, this is why I say, on this type of corporation, you don't want to place property in here. There is double taxation on this, meaning I personally am an employee of my C Corp. Okay. So what does this mean? As we get into the other corporations, you're going to see the difference in this. What this means is that when any type of dividend is dispersed, you're taxed again. So any type of profit that is made in the corporation for that year is taxed. Anytime you issue funds out of the corporation to any of the shareholders, it's taxed again. So that's what's called double taxation. However, if managed appropriately in a business, the write-offs and the way that you operate this corporation have so many benefits. However, if you operate it incorrectly, you will be taxed at the corporate level, and then you're going to be taxed at the personal level. So you could go to the next screen here. I already kind of talked about that it's a high maintenance corporation. It is more expensive to maintain. You do need to have a professional CPA maintain this corporation. You need to make sure everything is filed and accurate. So a lot of times when people will open a corporation, they kind of let it ride and they don't do anything. They don't update their minutes. They don't maintain financial records and reports. With this type of corporation, it has to be tight. You have to make sure that you're operating it super effectively and that you have a professional doing this, because this type of corporation, it does demand a lot of care. Now, once again, this type of corporation, you don't want to hold property in my opinion. Now, there's some people out there, I'm basing this class based on my experience for over a decade, actually even probably 2 decades of running all of these corporations. And I've learned and I've made mistakes and I've hit walls, and then I've done very well on them as well. So this type of corporation, you do not want to hold property in my opinion. The capital gains tax is a lot higher when you're selling it because it is not a flow through entity. And we'll talk about that in a bit. It is not a flow through entity. However, make sure that you're aware of what type of corporation you're operating, because there's many people that may open up a corporation and not even realize that it's being filed as a C. And if you have property in there, you're going to run into an issue. Those of you that are operating certain businesses, you may want to get with me personally about how, like, certain things that I've done to operate the C corporation very effectively, because like I said, I do have Remax operating as a C corporation, because with a real estate office comes a whole lot of liability. The transactions that you guys are, maneuvering every day, they come with a whole lot of liability. And therefore, on a C Corp, it is a completely and totally separate entity. And if run properly, there is absolutely zero liability on the owner or shareholders of that company. So to further go into real estate in this corporation, this is what could happen. So when you're real, and we're in California, you guys, remember we've been talking about this. When your real estate appreciates, and it will in this state, if it's inside of a C corporation and the property is sold by your C Corp, those tax, the capital gains, they're going to be, or the gains are going to be taxed at a corporate level and at corporate tax rates. And this is something that you don't want. There's, on the next class, I'm going to talk about 1031 exchanges and avoiding taxation and things that you could do. You do not want your gains to be taxed on a C corporate level. So do not hold property here. Moving into the S corporation. An S corporation, I want you guys to remember this, because once again, when you're operating and working with a CPA, this is important. This is a tax election. And so an S corporation is only a tax election. It's not even like a corporation. An LLC or a C corporation can elect to be taxed as an S corporation. And what does that mean? The business does not actually pay taxes, okay? So what that means here is whenever there are gains in this type of corporation, the money that is a gain in this corporation will flow into your personal tax returns in a K-1. This type of corporation avoids double taxation. Now, when I move into talking about an LLC, I'm going to talk about, which is actually better for you guys, at the end of all of this. With this corporation, you have to be a US citizen, and it does limit shareholders. So this type of tax filing, a lot of the time, the Fortune 500 companies do not file as this type of company. However, it does have massive, massive benefits that we're going to go into in a bit. Okay, this is a very important thing right here, you guys. Looking at this. On the C corporation, when you run that corporation effectively, there is very, very little IRS scrutiny. Meaning, on a C corp, there's so many standards that you have to abide by when you file that there's rarely an audit. And I could say in 20 years, it's never happened to me. On a S corp, the IRS does monitor this type of corporation a lot more closely. And the reason for that is because it's a flow-through corporation where any type of income or profit will go to the actual owners of the company, okay? Now, on this type of corporation, one thing that you have to do is you need to pay yourself a reasonable W-2 salary on this. And there's actual benefits in that, because you're going to pay into your FICA, you're going to pay your Social Security, and you're going to match FICA because you're the actual owner of the corporation. I'm going to explain that, towards the end of this. But if this company is run properly, it could actually save you like an additional 15% on taxes. That's the average. And so after I go through the LLC, I'm going to, you could go to the next one. That's fine, you guys. After I go through the LLC, I'm going to explain when you should operate through an LLC and when you should convert and switch to an S Corp filing status. So the LLC, this is the type of company that I think most of us in real estate hear about. And in reality, it really is the best thing that has happened to real estate investors. It's so easy to set up. You can have several of them. The cost is super low. On this type of corporation, it protects your assets. You also have that corporate veil. Now, the corporate veil, when we talk about that, where it separates the individual from your corporation, you have to make sure that items in the corporation are maintained, because if you do not maintain your corporation effectively, that corporate veil can be pierced. And what that means is when the corporate veil is pierced, you will have liability as an individual. This type of company is not subject to double taxation. The LLC income is reported on your personal tax return. And so with the company that I operate LLCs with is I hold property in LLCs. So usually the LLCs that I have, you want to create the LLC first, and then you want to buy the property with the LLC and hold that property in the LLC. There's several ways to do it. However, this is oh, thank you, you guys. I actually forgot about this slide. I'm just moseying along to explaining why. This keeps me on track. I appreciate this. The LLCs, like I would just say, they're easy to manage. You can have several at one time. And so the idea of having several LLCs is that they're not costly, but it reduces your liability in the event of a lawsuit. And I'll give you an example. This is the best structure and the best type of corporation to hold property in. So let's just say the desert houses that I have are in one LLC. Certain apartments in certain areas are in another LLC. You want to have property in different LLCs because let's just say there's an issue or there's a major problem that you encounter while operating business or operating your property or having tenants, whatever it is. The liability is only limited to that particular LLC, and your holdings for all of the other LLCs are protected. So as you move along in real estate investing, you want to make sure that you have certain properties in certain LLCs, and you don't make any one LLC have too much equity in it. So it's definitely something to take a look at. However, the beauty of this is that should you choose, I mean, it's $800 a year for an LLC filing and just to hold property in there. So you could even have one for each property. That would be, a whole lot of work. So it's usually good to bundle certain properties in certain LLCs. But like I said, this is when we're investing in real estate, this is actually the structure that is the best to purchase property and to hold property in, and to even do flips or anything like that. And I'll get into that in a little bit regarding money, the actual money associated with it. So the question that we have now is, and notice on here, I didn't put C Corp, LLC, or S Corp, because the C Corporation, like I said, is kind of a whole different animal. And you want to, that is a corporation to, be operating a business that has a lot of cash flow and a lot of income and revenue through. LLC or S Corp. So for level 1, when you're just getting started and getting into real estate investing, this is a great LLC. This is a great company to open. You open an LLC. Usually it's with low business income or no income, meaning you hold a property, you're just holding it there, waiting for it to appreciate. Or your goal, like this is a great company to have if your goal is to start investing and growing a business. So what do I mean by growing a business? And I think on the next frame, I explain this a little bit. So the S Corp is what I would call level 2, where your net profit in your business is 80 to 100,000. This is when you should consider electing to be taxed at an S Corp level. When I say, go back to that, I'm not ready for this one yet, you guys. When I say 80,000 to 100 net profit, it's not gross commissions earned, okay? So I want to be really clear on this, because if you're an agent, which those of you watching, I'm sure you are, if you're an agent and you intend to utilize this corporation to purchase property and to run your real estate business out of, okay, you can start with an LLC. However, once the company, now you can make 500,000 in gross commissions, and the net profit on your company can still be 80 to $100,000. This is net profit after deduction, after deductions, after write-offs. So it's, very feasible. Don't consider this income generated. Consider that net profit at the end of all your tax deductions and write-offs. And so if your business is netting this amount, then it is probably a good idea to move over and to start operating through an S Corp. And I think a lot of agents right now, let's say you're buying property, like I said, and then you're selling real estate and you're doing any other type of side hustle, any other type of business that is bringing money in, keep a good eye on this, because if you're profiting at a certain level, tell your CPA or talk to them about filing as an S Corp status. You can file your tax return with your LLC as an S Corp status. So the key difference here and why you want to do that is, in an LLC, members pay self-employment taxes, okay, Social Security, Medicare, you pay it to the IRS. Now, with an S Corp, you have what are called shareholders, not members, and the shareholders are paid a salary, and the business pays their payroll taxes, which those taxes can be deducted as a business expense from the company's taxable income. Now, on this, and to give you an example, I operate Legacy First Escrow through an S Corp. And what I do there is I pay myself wages. And remember, though, on this S Corp, there's one key factor here where you need to make sure how much wages you're paying yourself. And you don't want it to be too high, because what happens is that you're going to have to match the company's payroll taxes. So when you're operating a business, a lot of cost and expense is paid towards matching your employees' FICA and SDI. You're going to match that as the employer. And I believe last time I checked, the employee will pay about 7.5% towards those taxes. But as an employer, you're going to pay 7.5% as well. You're going to match whatever they pay. And so when you're operating this way and you're paying yourself wages, remember you're also paying the other side, because you're the owner. So you're paying both. So there's a cap there on what you should be paying out, on your personal company to your personal wages. And then moving into, we're going to talk about that. If the business has leftover profits, they're distributed to shareholders as a dividend, which has a lower tax rate than regular income. Okay, this right here is really fun. And this is one of the benefits of operating and operate, like having this type of tax filing, because you can, let's say, take $50,000 for the year on a W-2. and then you're going to pay taxes on it. You're going to match the FICA and SDI as the employer. But then anything that is left, you can say, I'm going to take 50,000 and issue that to myself as a dividend. And the beauty of dividends is that they're taxed very, very differently. You might even get away, if you do all of your tax preparation correctly, you might even get away with not paying any type of taxes when you issue yourself dividends. And so this here, when you're operating, let's say, a company through this, you can definitely monitor your cash flow coming out and really save yourself a whole lot on taxes. Now, I'm going to tie this in, and you're going to see, like, how does this tie in to real estate? You know, how does all of this tie in to real estate? I'm going to tell you, because I did a lot of taxes. Why? We're still on taxes. But this is good. It's so funny. I actually forgot some of the notes that I gave you guys. You could go on to the next one. I already went over this. Okay, so here is the thing. And now that you guys know a bit about the 3 different types of corporations that are out there where you could operate under and where you could hold property, I'm going to talk about what I would do differently and what I would do from the very beginning, holding real property. So operating a business and holding real estate are 2 different things. However, there's a certain level that you can operate at where you can operate them together. The S Corp that I talked about is a beautiful corporation, or a tax filing rather, that you can elect to file under. If you're purchasing property, you're going to hold it, you can keep it in that corporation, and you're selling real estate. So it's a clean way to operate if you're doing both. And I would recommend, let's say, anybody that is making over 80,000, that they elect that type of tax filing and you shift it to that S corporation, because there's going to be massive tax benefits on that. Now, if you're purchasing property and you do not intend to operate a side business or have any additional revenue coming in from external sources, at that point, what I would do is open an LLC and keep it simple and keep your property in the LLC. When we get into next week's class, there's so many things that you could do with both of those corporations when it comes to selling property. You don't have to worry about what is going to happen when you sell the property for tax circumstances and reasons. Now, I'm going to tell you on the because a lot of people that are listening might be, I'm going to tell my CPA that I want to file under S Corp status. So here is the thing with this, and this is what I would do very, very differently in my career and over the 20 years that I've been operating all of these different types of corporations. I made little notes. Hold on. Of all the things I would do differently. Okay, so be very careful when you're operating an S Corp. What I have here, the first thing that I did very, very wrong until I got the feel of how to work it and operate it, is I elected to have Legacy First Escrow set up as an S corporation. And what I did not anticipate in doing that on year 1, when I began to operate Legacy First as a DFPI escrow, it's been about, I think, 7 years now. Prior to that, I was operating under the Department of Real Estate. And when I shifted to DFPI, which was a blessing, we do outside escrows and refis and everything now for various companies. But when I made that shift and I filed under an S Corp, I thought, great, I can utilize the corporation and I can, have this as an S Corp and have everything flow to the personal return and not have the double taxation like I do with RE/MAX. If you have income coming in a substantial amount, it's a mistake to do it that way, because what happens if it's not monitored effectively, it will go on your return and you will pay a high amount of taxes on your personal return if you do not have enough write-offs. So this is definitely, and believe me, I learned through trial and error, because you can have professionals that are watching over your books and that are doing everything for you as far as filings and maintaining things for you. However, what they don't know is what your income is going to be, and they don't know really in reality how to maneuver managing that type of income, because they figure, well, if that's coming in, this flows to the personal return, and then you pay taxes on that. So operating under this company it's a very good election, the S filing status, but you do have to be very aware and very careful of when you're operating in this way. And that's what I would do differently. I ended up having to shift it. It's still an S corp. However, I have it tiered. So as you go along, you even get creative and you can tier things. I have everything flowing from that S corp, not to my return, but I immediately sift profits to a C corporation so that I can get better write-offs there. And there's actually 2 different avenues where there's write-offs from each company. Now, another thing that I would do is you need to make sure that you're holding property. And I touched on this a little bit before. You need to make sure that you're holding property in the appropriate corporation from the very beginning. And I made mistakes with that as well, because when you don't hold it in the appropriate corporation and you start moving property, there's a lot of tax consequence to that. And so you don't want to do that, because when your properties appreciate, which they do, and you have, 5-10 years down the line, and then you want to move property or you want to do something and you're holding it in the wrong corporation, it could be a really big problem, a really big tax issue. And, I've made that mistake. So from day one, make sure that you file the right corporation and you're holding your property in the right corporation and you're running your businesses through the right corporation. Now, another thing that this is actually the most important one of all in this class. This is super, super important. And I know that all of this data that we sort of ran through, if you guys have questions, get with me personally on operating each type of corporation. I know that it's kind of this isn't like a super fun class. It's like a lot of data, but you need to, from the very beginning, hire and work with professionals. And so you go and interview CPAs, go and talk to different people, interview them, get their take on what can be done with your portfolio, or ask them questions about initial investing and how to hold property, what their thoughts are, what their views are. When I initially started out, the biggest mistake that I made is that when I hired the professional, and this, my mindset was obviously very different 20 years ago than what it is now. And 20 years ago, I had this mindset where I just didn't want to pay a lot. I didn't want to pay a lot to hire people and have people do things, And so I was always shopping. This is the younger Jennifer. I was always shopping for the discount. And what I learned is that you pay, you get what you pay for. You get what you pay for, and that goes for anything in business, and especially in our field. And for whatever reason, and I'm sure that a lot of you guys can relate in the real estate industry, for whatever reason, it is so dominant in our industry to have that mindset where everybody is looking to save a buck. And it's the wrong mindset to have. It's the wrong, to nickel and dime and to look for that budget deal and to it's the wrong mindset, because it's not a mindset of abundance. It's not honoring people for their work. And believe me, when you're looking for a discount, you're going to find it in service. And so don't look at price tag when you're shopping for a CPA. And I talked about this yesterday on a class that had with Sonia, where have you ever gone to a doctor office, right? And then, they're going to do whatever medical procedure on you. And you're like, well, can I get $1,000 off? I mean, nobody does that, right? Yet for whatever reason, we do, like people do it in this industry. And it's just something that drives me nuts, because it's like I see myself doing that 20 years ago. And what shifted and changed is that now I value, and that this has been, for the last 15 years, I learned very, very quick in the first 5 years of business, value people's time and value people's knowledge. So when you go and you're interviewing a CPA or you're interviewing a professional to work with you, just make sure they've been in business for a long time, because nothing, especially when it comes to taxation and property and running businesses, you can have somebody that's been in the business for a year or so, and everybody is new at some point in time. Everybody is starting at some point in time. It's not what you want to pay for when you're running businesses and you're dealing with taxes. I ran into a lot of walls with filing my taxes, and I have paid so much more taxes than I should have, not having the right people early on when I first opened and started operating my businesses. Now, the second thing, or I don't know, second, third, whatever amount of things I've been going through. The other thing that I wanted to tell you guys, and I'm gonna end with this topic, is even though we hire professionals, a big initial mistake that I made is that I assumed those professionals would handle everything for me. And it's not going to be the case, because nobody knows your need and nobody knows your business structure more than you do. And so when you're talking to CPAs, you have to make sure that you're getting with them and telling them it's more of a partnership. Because as you're operating and running your business, you're going to think of ideas, or you should be constantly thinking of ideas on and what could be done. And I'm going to give you an example, like regarding little things that make a difference. And this might not be related to buying and holding property, but it's all related, because if you're constantly thinking about how can I better my business, it will apply, it'll flow to every area of your business. And so I know that I'm operating a real estate company here. And I know that real estate companies have to pay for rent. And so RE/MAX Champions pays money to one of my companies to lease this building. And so what is that? That is a great way to bring money out of a corporation tax-free every month. So we set up a contract between, this company and that company, and you think of these things. And so same thing when you're holding property, you have to take a look at, okay, I have holdings in this property, or I'm running an S Corp and I have a real estate business that I'm running this S Corp with this S Corp. So how can I get creative to where I can utilize and maximize the money that I'm making, so that maybe I can buy more property? Because that is the beauty of corporations, in this country. It's the beauty of corporations, and it's here, and it's designed for us to take advantage of and to utilize when we're operating our business. So those agents you guys that are listening right now, and moving through the various types of corporations and kind of telling you which one I would start with, which one I would move to once you hit a certain amount of revenue, which one I would hold property exclusively in, and which one I would utilize for a high risk business. Like moving through that, you guys should be operating under a corporation. And I have said this, over and over, I know to multiple times in different classes, is that sometimes we don't want to do that extra work. And sometimes we don't want to dig in and say, I don't really know how to do this, but I'm going to go ahead and do it anyway. And believe me, when you make that decision, because everybody is a beginner, everybody starts somewhere. But if you don't start and you don't take that leap and you don't do it, then you're not going to progress. You will be in the same spot that you are now, 5 years from now. It's so easy for time to go by. And so it's taking those chances and taking that leap. And don't listen to people. Like, don't listen to certain people when they tell you to not do something in business. If I would have listened to what people told me when I was converting my escrow company from a DRE escrow to a DFPI escrow, they told me it's going to be too hard, too many audits. They come in every year. It's so costly, this and that. I didn't listen. And I said, well, if other people are doing it, then why wouldn't I be able to, right? It's the best thing I ever did, the best move I ever made. And so it could be the same thing in any avenue of business. Don't listen to when people say, oh, that's too complicated. Or what if you end up paying more taxes? Well, so what? So what if you do? Then you learn. I've paid, more taxes operating through the corporation because I operated it incorrectly. You could have CPAs and people that have your back, but at the end of the day, we have to learn. And so whatever you do, take the leap. And if you're not operating through corporation as a realtor, you should be, for maximum tax benefit. And if you're thinking, or if you have invested and you have property, then run your commissions through that company. And if it's an LLC, you could easily tell your CPA to just change the filing status to an S Corp for the following year. Very easy tax filing change. And so if you guys have any questions relating to any of this, I have operated and owned, like I said, all three of these types of corporations for almost 2 decades. And so I've seen it all. I've experienced it all. And I know, like, so many things that could possibly happen, good and bad. And I'm telling you guys, if you do decide to make that leap, which you won't regret it, set it up right from the beginning. Get that good CPA in place. Make sure you interview people. Pay them for their time. Don't start nickel and diming people. It's bad energy. It just looks bad. It feels bad to the other person. And you want to pay people for their time and value them, and make sure that they're giving their best to you too. And also never stop learning, and start networking and talking to people that are doing these same things. They're different conversations, trust me. People that are doing these things, they're very different conversations, because you can share that creativity. You can share business tools and ideas together. And my last thing that I want to let you guys know is, I know, like I said, there was a lot of info on each one of these corporations, but I wanted you to understand the benefits of each and what each one is utilized for. If you have any questions relating to what you're currently operating under, and you're thinking of investing in real estate, and you want to get my opinion on this, please get with me, because what I don't want you guys to do is to begin your real estate investing and then place real estate where it's going to be either taxed very heavily, or whether you're going to have a problem getting that piece of real estate out in the future. So we're going to talk about, in the next session, 1031 exchanges, and actually building on this, and how you can really avoid paying any type of taxes with 1031 exchanges. But with this, please know I'm always here. And remember, beginning investor, first property, go with an LLC. Get a tax person set up and working with you right away. And always, no matter what, do your own due diligence. Never place your future, your money, or anything else in the hands of other people. Make sure you're learning, and that you stay aware, and that you utilize everything available to you. A lot of people rely on other people. Constantly learn, constantly be curious. read books, listen to podcasts, so much information out there to where you can learn these types of things. And so with that, like I said, you guys, any questions on how to open an LLC, how to change your LLC's tax filing, how to maneuver any of that, please get with me and I will be more than happy to help you out. Oh, I think I froze. Did I freeze? Bummer. I froze.